The Fox City Score chapter and WHBY are pleased to bring you Biz Talk, a chance for you to hear from entrepreneurs and professionals as they share their experiences from starting to sustaining growth. Learn the skills needed for your business to be successful. If you missed anything, you can catch the Biz Talk podcast at biztalkwithscore.com. And now from the Myron Construction Studio, it's Biz Talk on WHBY.
Good morning and welcome to Biz Talk with Score. We're glad you joined us this week. I'm Terry Pinch, one of the co-hosts, and joining me this week as co-host is Rick Sense. Rick, how are you doing this week?
Doing well, Terry.
Good, and welcome to the show. To kick off the show this week, we've got one of our longtime sponsors and an expert on accounting and taxes and business management. It's Kurt Heling. Kurt, welcome to the show.
Hi, Terry. Hi, Rick. Always a pleasure to be here.
Good. So, as we get started, we're going to talk about another example of definitive decisions from the government. So we're going to talk about the beneficial ownership interest rule. Can you talk about that a little bit?
Yeah, so give you a little bit of background on what this is. The Treasury Department, through the Financial Crimes Enforcement Network, FinCEN, set up through the government, it was proposed that every LLC, every S corp, every small business out there needed to register with the federal government through this FinCEN website and report who their beneficial owners were. And what that means basically is anybody that had a certain percentage of ownership in a business, their spouses, anything like that, was supposed to register their business through the FinCEN website through this beneficial ownership interest tab. This came out a couple of years ago already. The deadline for this was December 31st of 2024. I went to a seminar on this in the middle of November, and at that point, the seminar facilitator said that there were 32 million entities in the country that were supposed to register for this. As of that point, 6 million had, which his point was sometime in the next 6 weeks they were going to crash the system as everybody came in to file and once they found out about it. Well, a couple things have happened since that time. Because they're asking for personal information, certain groups filed lawsuits against the government for implementing this, saying that it was an invasion of privacy. And through a Texas federal court, there was a temporary injunction which held off the need to file this BOI report. Then, within a matter of days, the government appealed, their appeal held up, and so the BOI was back on again. And at that point, they're going to give you until January 13th. They're going to give you basically an extra 2 weeks to file, because we're at the middle of December at this point. Then there was another court case that put another temporary injunction on, which is where we're at right now. So the BOI is off again. And so this is going through the court system, through multiple cases, and eventually I think what's going to end up happening is it's going to end up having to go to a Supreme Court case and get a final determination on it. But at this point, there is no BOI registration requirement. If you were to go to the FinCEN website and register, you go to that BOI tab to put in your personal information. It will say on there now that this is a voluntary action that you're taking, not a mandatory action. The reason this was a big deal was because of the fines and penalties involved with it. They were looking at fines of over $500 per day that you were late on filing the BOI information form. So obviously that adds up to a lot of money in a hurry, and the Treasury Department did the worst job imaginable of informing the business community that this was a requirement, and they were putting it on to the professionals, accountants, attorneys, to pass this information along to their clients. And that's why we got to November and so few entities had made this filing. Where it goes from here, it's completely speculative. It's going to go into through the court system. Like I say, it will probably end up going to the Supreme Court before there's a final determination on it, which, as these things go, is going to take, weeks, if not months. So stay tuned.
Okay. And if I remember right, and you can correct me, Kurt, this was all related to business, the Congress wanting to stop businesses from hiding who really owned a business due to a certain president's son who perhaps hid some LLCs.
Yeah, so it really goes to the money laundering aspect of what can be done with some of these LLCs, and they wanted to see who actually owns these LLCs, whether they're individuals within the U.S., whether they're foreign. We do have an outgoing president who had a son who was involved in 19 of these LLCs, with money going back and forth and to who knows where. And so that's why the rules originally came up. Where it goes from here, who knows? Maybe it ends up getting repackaged into something else. We don't know at this point.
Yeah. And just so everybody knows too, the reason big companies weren't asked to do it is because they already have to report their ownership.
Right, and that's one of the things that came up with this is, as we would talk to people would say, well, I'm just a small business. They don't need to know about my information. And it's really the small businesses that they were going after, because the big companies, they already know who the owners are. They know who the officers are. They've got a lot tighter requirements on information that they need to provide. So the government already had all their information. It's the smaller companies that they didn't have the information on.
Yeah. Okay. So switch discussions now. We're going to talk for the rest of the show around opportunities for 2025 and beyond, accounting and tax planning, business management, et cetera, going forward. So let's start with what should businesses be doing to plan for their business for 2025?
Well, one of the things that companies do, sometimes as a habit, sometimes as a matter of doing it for the sake of doing it, quite honestly, is they will do a budget. And when you think about how a budget works, it's almost like a New Year's resolution. And if we know how New Year's resolutions work, there's what's called Quitter's Friday, which is the second Friday in January, where all most New Year's resolutions have already fallen by the wayside. And budgets kind of fall into that same category. People put time and effort into coming up with a budget for the upcoming year, which is great. But a lot of times the thought process behind it isn't correct. For instance, they may look at their expenses and either undershoot what their expenses are going to be because they're not thinking through what things are going to happen for the year. Or they'll take their expenses and just say, okay, just bump it up by 5% throughout the year and we'll go from there. Or they know they've got a project coming up. They know they've got certain expenses coming up, so they factor that into the budget. Then when they're looking at the revenues, they don't think about, are the revenues really going to come through to help pay for this, or are we going to need to finance it, or how's this going to work? They just bump the revenues up to cover the costs that they're going to incur so that it comes out on the bottom line. So the thought process behind this doesn't always work as well as it should. And when you're dealing with bigger companies, I was reading an article, the CEO at Bayer, which is a multinational company, was talking about getting rid of the annual budget. And what they did is they turned it into rolling 90-day budgets because of how unpredictable things can be and the amount of time that gets spent on the annual budget and how accurate that annual budget is. By the time that you set this up at the beginning of January, between now and November, December, all kinds of different things can happen within your company, internally, external forces affecting it that can change the thought process of what you're doing in that company compared to where you're at right now. So his thought process was taking this in terms of rolling 90-day budgets. That way you get the internal politics out of it. And I think this is a good idea for our small business owners to take a look at also, because it's a lot easier to take a look at what's going to happen between January 1st and March 31st or February 1st and April 30th than it is to say what's going to happen between January 1st and December 31st. It gets too wide, and I think it becomes a little bit too overwhelming for them at times. But bringing it down into chunks like that, I think, is a lot easier for our small business owners to work with. And not that they don't need to think long term, but at the same time, it helps them focus on how are today's decisions going to affect tomorrow's cash flow.
And as they make those decisions, and I assume they're still, like if it's January 1st and they're doing the first 3 months, they're still doing a forecast for the rest of the year, but it's based on what they think is going to happen in the first quarter instead of what they think is going to happen in September.
Correct. Exactly. It makes it a lot more easy from a planning standpoint, and it makes it a lot easier to adjust that budget or forecast in terms of 90-day increments as opposed to adjusting an entire year's budget as things change during the year.
And so what I'd ask is you have clients coming in, do you see a relationship between those who really do good planning and think about what's coming and the success of the business? So do people really need to do this planning?
Oh, it's a direct correlation because, there's the old 5 Ps, proper planning prevents poor performance type thing. You can even add a 6th P in there if you want to. But what happens with these small business owners is a lot of times they can tend to turn into very reactive business owners, and they tend to focus on the day-to-day, and they get stuck in the business more and more rather than focusing on the business and pulling themselves out of the business and looking at the big picture of where do they want to take the business, how do they want this business to move forward, because they get so wrapped up in the day-to-day processes and the emergencies of the day that they can't focus on the big picture. Those that can pull themselves out and focus on those long-term projects and big picture projects are the ones that ultimately are the most successful in the long run.
And do your customers and clients share their plans and budgets with you? Do you find that beneficial?
We find it beneficial because then we can help from a tax planning standpoint as well, as well as a counseling standpoint, because if they share that with us, we can kind of go through, well, what about this? Or have you thought through this? Or, okay, if you're going to do that, are you going to need additional staff? Or if you're going to have additional staff, are you going to need additional space? And think through some of the logistics of how an expansion might work, for instance, or how bringing in a new machine might work. You could bring in a great new machine, but then, number one, what do you do with the old one? How do you train up the new people to work on the new machine? Is there technology that they need to learn? What's the ramp-up time going to be? And is there going to be a downturn in cash flow in the short term before it starts paying for itself? So those are all things to think through, and we can help in that process.
Okay, we've reached the point where we're going to take our first break. You're listening to Biz Talk with Score and WHBI, and we'll be right back.
Welcome back to Biz Talk. I'm Rick Sentz, along with co-host Terry Pinch, and today we are talking with Kurt Heling from Heling and Associates. And before we rejoin the conversation with Kurt, I'd just like to take a few moments to talk to you about SCORE. SCORE Northeast Wisconsin serves an 18-county area in northeastern Wisconsin, plus the county of Menominee in Michigan, offering entrepreneurs no cost and confidential mentoring. Those areas of expertise include IT, social media, marketing, cash flow, accounting, strategic planning, workflow, HR, retail, best practices, and many others. In order to register for a no-cost confidential mentoring session, In order to learn more about SCORE Northeast Wisconsin, visit our website at score.org/Northeast Wisconsin. You can learn more about how the SCORE chapter can assist you with starting and or growing your business, and you can complete an application for a mentoring session. Simply complete the online form and submit it to SCORE. Within a few days, a SCORE mentor will be contacting you to set up a meeting. Remember, SCORE is no cost and offers experts who can offer you assistance in many different areas. To get started, visit our website at score.org/Northeast Wisconsin. To support small business people, SCORE Northeast Wisconsin is always looking for new mentors. If you have experience that you would like to share with others, we'd love to talk to you. We welcome volunteers with experience in all aspects of business. Small business owners need your help, and your experience can make a real difference to their success. Go to score.org/Northeast Wisconsin. Click on the volunteer button and fill out the short application, and someone from SCORE will get back to you to explain more. So, Kurt, during the last section, we were talking about budgeting and the different thought process behind how to do that. And maybe if you wouldn't mind sharing with listeners how you do it with your team at Heling and Associates.
Sure. We've gone through a big transition over the last couple of years, staffing wise, and with new staff replacing old staff, and then adding additional staff on top of that. So, for instance, in 2024, we added 3 new people. So you might look at that and say, okay, well, you got to factor in the cost of, their salaries, their payroll taxes, insurance if they're on the plan, 401k, and those sorts of things. And, the short side of it is, okay, those are the items you need to factor in. But when you're actually looking at the project itself and bringing these people on, you got to think about, okay, where are we going to get these people? Are we using a staffing agency? That's going to cost a percentage of the person's salary. Where are you going to have these people? You're going to have to increase the office space that you're using. So you got to factor that additional rent in there. You've got to set up the office for them. You've got to get them furniture. You've got to get them computers. You've got to get the internet connection going to those computers and all the wiring that goes with it. So you've got to think about all those different pieces that come into bringing a new person in the office, not just their salary and their payroll taxes. And I think that's where sometimes people can, have some mistakes come in or some short-sightedness that they're not thinking about all the steps that go into, for instance, bring new people on board or that expansion that happens. Another situation we had is we were upgrading our server and then bringing in some new software on top of that for project management. Okay, so we've got the cost of the server, and then you've got to factor in the cost of the IT people to set up the server and do the data transfer from the old server and those sorts of things. And then you've got the new software coming in, the practice management software, which is a great thing, but you've got to factor in the cost of the time of the people to set that software up and bring all the data in that needs to be brought in. And if you're using people that are normally chargeable people or that are working on customer projects, client projects, and they're getting involved with this side of it, well, now you've got 2 things working. One is the cost of the person, and number 2, that person's not bringing in any work at that point or any revenue at that point because they're working on something that would be administrative. So when you look at it from that standpoint, it's not just the hard cost of that project, it's all the costs that go on top of it that you've got to factor in. And as you're doing that, you got to look at it and say, okay, so we're doing this in the fall. We're going to have to hit our line of credit then in the fall. We've got our busy season coming up. Here's how much we need to make during the busy season to take care of the line of credit, make sure this is all up and running. In our business with the seasonality, we get anywhere between 50 to 55% of our revenue in the first 4 months of the year. So doing these things in the fall, by the time we get to April 30th, those things are paid for and the line of credit's paid off. Depending on your industry or your business, that might not be the case. So you've got to think about the timing of doing some of these things as well. So there might be a little bit of short-term pain up front if you know that you're going to be able to get those costs paid for and then get up and running smoothly thereafter. But if you don't have that kind of a revenue spike in those 4 months, it's going to take you a lot longer to pay for those sorts of things. So that's where we can, the difference between our sort of business and maybe somebody else who doesn't have the seasonality that we do.
And as you do this planning, one of the things you talked about was bringing in new people. Just in general, we had talked before the show, Rick and I, and the unemployment rate in this area is around 2%. Are you and your clients still seeing that it's difficult to hire people and find employees?
It is difficult to find people, and I will say our industry is I don't know if that's unique necessarily, but it is an industry where there are more people leaving the industry than coming into it, which I don't think is necessarily unique, but it poses some special problems. Because finding somebody, for instance, that's got 8 to 10 years of experience, that's a CPA, it takes a lot of work to find that person. That's where you need, professional staff, recruiters, staffing people to help find those people. So you've got that additional cost involved there. In the meantime, while you don't have those people, you're kind of short and overworking the people you've got, because of the fact that you can only spread the work around so much, so work gets backed up. Things aren't getting out the door like they should be. So you run into those situations. But yeah, we see it as much in our industry, if not more so. Other industries that I see it in, things like the restaurant industry, they're having a hard time finding staff. And what's happened there is the amount that they have to pay their staff compared to, say, 5 years ago has gone up probably anywhere from 33% to 50% increase, which is why restaurants are so much more expensive now. It's not that the owners got greedier, they've got more cost to cover. And you see this in other industries as well.
Okay. All right, great. We're going to be taking our second break now. You're listening to Biz Talk with Score and WHBY. We'll be right back after these messages. Welcome back to Biz Talk with Score. We're glad you joined us this week. This week our guest is Kurt Heling from Heling & Associates, longtime sponsor of the show. Before I get back to Kurt, I just want to mention more information about the Score website and the courses and webinars we have. There are literally thousands of webinars out on our website where you can learn about so many different things. And they're mostly free, and you can access those at our website, which is score.org/Northeast Wisconsin. And in the top of the page, you'll see a workshop and events tab. You click on that tab, and there will be a couple different subsections, but there's coming events, which will be webinars that are going to be live that you can join live and in person. Again, most of those are free. Or there'll be recorded webinars, which you can go in and where there's literally just about any business topic you could think about. You can go in and listen to some of those. And you can also narrow it down by region if you want to just hear things from the Midwest and this area. You can do some of those things too for sorting. But there are some really good shows on things like artificial intelligence, how to set up a business, marketing for your business, how to hire an accountant. That's out there somewhere too, and why you need to hire an accountant, which is something we always recommend to people. So all of that sort of thing is out there. So again, it's score.org/Northeast Wisconsin, and you can go out to the workshop and events tab. So with that, we're going to turn back to Kurt. And Kurt, we want to talk a little bit now about some of the things that are happening in 2025, what's up in the air and what's coming next. So 2025 is an important year in terms of some of the tax laws because they expire at the end of this year. Can you talk about what people should expect going forward?
Yeah, so just to give a little bit of history, a brief history, back in 2018, we had one of the most extensive tax law changes that we've had in the last roughly 40 years. some of the things that happened, for instance, we got rid of the exemptions for having children and dependents, and we combined that with the standard deduction, and we made a much higher standard deduction. We also had things for business owners come into play, like qualified business income. And what happened there is the corporate tax rate turned into a flat 21%. It used to have tiers of 15% and then 25, all the way up to 40%. Turned into a flat 21%. And with that reduction, it was actually Ron Johnson who pushed the legislation through to get this qualified business income for small business owners, sole proprietors, S corps, partnerships. And what that is it's a 20% off the top deduction for their business income as part of their flow through individual income tax. So that's one of the things that came into play. We had bonus depreciation, things like that. So these things all came into play in 2018, and they are due to expire at the end of 2025. So what that means is we've got our 2024 taxes that we're doing now this spring between now and April 15th, and then we'll have another year of these rules up through next year. And then at that point, if nothing were to happen, we would go back to all the old rules that we had at the end of 2018. So that being the case, it is highly likely that, we've got a new president coming in. It's actually the same president who set up the rules or was the president at the time that the 2018 rules came into play. So we've got a new president coming in, new Congress coming in. And what we expect to see happen is typically it'll take them a year from the time that they come into office, hash through all these things, do all the political things that need to happen, and finally get something passed. Something is going to happen in 2025 that'll be effective starting in 2026. Exactly what it looks like, we don't necessarily know yet. Being that it's a similar administration, I would expect some of these things to stay in place, but there may be other things that come into play that we haven't even talked about yet or haven't been brought up in the news. There's a few specific ones that bear some talk, some detail on this. For instance, that QBI, that qualified business income that we talked about, this is huge for our small business owners. If this were to go away at the end of 2025, every small business owner in America would have an automatic 20% increase to their taxable income without doing anything differently. So every small business owner has got to be watching this really closely to see what happens with the QBI deduction. A lot of business owners don't even know that this is out there yet. They don't even understand where it came from or what's this line on the front of my tax return. So that's a conversation to have with their accountants, saying, okay, are we taking advantage of this and are we getting it? And what happens if this goes away and how do we plan for it? So that's one big one. Another one is bonus depreciation. And what bonus depreciation is when you buy an asset, typically you're required to depreciate that asset. If it's a car, for instance, you depreciate over 5 years. If it's a building, it might be 39 years. If it's a parking lot, it might be 15 years. If it's a machine, it might be 7 years. So that's the typical requirement for it. With bonus depreciation, with a lot of these assets, you are able to take that deduction right up front. And there's two ways you can do it. There's Section 179, which has been around forever and probably will stay in some way, shape, or form going forward. One of the limitations with Section 179 is you cannot take that in a loss situation, and there are caps on how much you can buy in assets and still take Section 179. With bonus, you don't have that. So it gives you a little bit more flexibility. That bonus is due to go away as well. So that would allow you what the bonus does is it allows you to depreciate that all in the year that you buy it. even if you haven't paid for it in full yet, even if you finance it over 5 years or 7 years, you get the deduction all in 1 year. That's huge for our business owners. So if that goes away, that would have an impact. That would be something that I would expect to be renewed in some way, shape, or form. I don't know exactly what yet. They haven't proposed it, but I would expect to see that as well.
So from a business owner's perspective, it's more of a wait and see, expect they will continue, but watch it.
It's a wait and see, and if it's a matter of doing something this year versus next year, we're going to have to see what's proposed, what comes out, what looks like it's going to get approved, because it might be fall before anything gets finalized as to what's going to go into 2026. So we're really going to need to watch what's proposed out there, and they may come up with some new ideas that might be beneficial, might be beneficial or detrimental. So we're going to have to factor those items in as well.
So how should a small business owner go about planning for things like that they could spend the money in 2025, but it makes more sense in 2026 or vice versa? How do they move forward with that?
Well, quite honestly, you can get paralysis by analysis if you try and think through every situation that could happen. So what we do is we say, okay, these are the rules now. This is what we know now. This is what we can plan for now. And if you're thinking about doing something this year versus next year, I like to know what the rules are going to be when in the year I'm doing it. I don't want somebody moving the goalposts on me. So I tend to say, let's deal with the rules that we know and get as much factored into that as we can.
Yeah, and I think a lot of people tend to grab on to, well, this could change as a reason to not do anything.
Right. But it could change to what? And then you haven't made a decision on something. And then hindsight could end up being 2020.
Yeah, and I guess the other side of it too is you don't want people to overreact and do something too quickly based on a forecast, or their forecast of what's going to happen versus what they know today.
Right, because that forecast may not come to fruition.
Yeah.
Or it may be phased in over a period of years. So you've really got to watch what you read on the internet as far as what's going to come into play. And especially, you hear certain things come out during campaigns of what's going to be proposed. What comes up in campaigns and what actually ends up on the back end after everything is settled are two different things. On the individual side, for instance, we've heard during the campaign that there would no longer be a tax on Social Security benefits. Well, okay, how's that going to work? Because how are you going to cover the losses that are going to come up from not taxing that income? So somewhere that there's going to have to be some give and take on that. On the individual side too, there's a couple of other things that come into play. I still, at this point, get questions from people whether or not they should pay their property taxes before the end of December or not. It doesn't matter, because one thing that happened, and this was a big thing that happened in 2018, is there was what was called the SALT limitation, state and local tax limitation on deductions. They limited it to $10,000. So that means $10,000 is the most you can deduct between your state withholding, your property taxes, your state estimates. You're capped at $10,000. Well, it doesn't take too much to get up to $10,000, even in Wisconsin. And you go up to the coast, your property taxes, $10,000 in property taxes doesn't cover a 1,200 square foot ranch house. $10,000 in state income taxes might be your state income tax on $80,000 of income with some of these high tax states. So that limitation, I think something's going to happen with it. And the reason I say that is one of the issues with that is that $10,000 is hard and fast, whether you're single, married, filing jointly, or head of household. It's $10,000. So at the very least, I'd expect that to get tiered, you know, 10,000 for single, 15 for head household, 20 for married filing jointly. That would make sense. That doesn't always mean how tax laws get made. Tax laws don't always make sense. But it would, you know, it would be something that would make sense to see happen. And you've got the higher standard deduction in there too. So the standard deduction now is $30,000. So even with those state and local taxes, you've got to have your mortgage interest, your donations, and those taxes all cover $30,000 before you get to the first dollar benefit out of it. It doesn't happen as often anymore. So there are some things in there that I expect to see some changes with it. But people need to understand the rules as they're written and before they start comparing it with the rules that are going to be proposed.
So I guess this fits back to the discussion in the first segment a little bit too, and second segment around planning for the future. And you need to plan for events and understand your cash flow, but don't try to forecast what the government or the economy is going to do.
Yeah, you'll drive yourself nuts.
That's absolutely true. As people are sitting down and they're through the New Year's and getting ready in January to start to do their work going forward, how much time should they be trying to work on, say, setting up an appointment with their accountant, setting up an appointment with the business advisors? Is that something they should be doing more in the fall, or is January, February okay time to start doing that?
Ideally, I would say in the fall, because especially with your tax advisor, by the time you get to January, there's not a lot more you can do, other than maybe some retirement contributions or some decisions based on what got done in the previous year. So the meetings need to happen in the fall, September, October, November. Even December starts getting to be a little bit late, because if you're looking at your P&L and somebody says, well, gee, it'd help if you bought some equipment or if you bought a vehicle. Well, okay, good luck going to try out and find a vehicle in the week between Christmas and New Year's. It's not that easy to do. So you want to have those conversations, you know, in that September, October, November timeframe.
Okay. And so then as people are looking at 2025 taxes, the assumption then should be the law is what the law is. Don't worry about 2025. It's not changing, but don't try to predict what 2026 is going to be. Do you expect you'll see people coming in and trying to adapt and adjust to what they think is coming?
Oh, absolutely. Because you see, well, part of it is because of social media and people trying to make money through social media. So they try and get out in front and say, hey, here's what you should be doing, because here's what's going to happen in 2026, even though it may not necessarily be finalized or set in stone yet. So there's people out there on social media that are trying to get ahead of this to create their own following, whether or not they've got any real insight versus, speculation. 9 times out of 10, it's more speculation than it is actual insight. And the other part of it is those situations tend to be very much of a one-size-fits-all type thing. They're not geared towards the individual who might be listening to them and has, special circumstances that they need to factor in.
Yeah. The other thing I guess I'd point out to people is if they remember a few years ago when all these pseudo accountants and tax people formed in and came in with all sorts of things on social media about getting some of the pandemic money and how you can do things with that.
Yeah, we don't want to get into that.
Yeah. So that caused all sorts of issues. So it's an example again of think through your business, don't listen to what's on social media, and plan appropriately. Good. Okay, we are at the point for our final break. You're listening to Biz Talk with Score on WHBY, and we'll be right back after these messages. I'd like to thank the sponsors and donors. who bring Biz Talk with Score to you each weekend. We couldn't present Biz Talk without their generous support. Thank you to Kurt. Thank you to Heling and Associates. Heling and Associates help small businesses and individuals not just prepare tax returns, but plan ahead, thereby minimizing your taxes for this year and beyond. Heling and Associates, personal connection, positive results. Thank you to Johnson Financial Group. Wherever you are in your life or the life of your business, Johnson Financial Group works with you to understand your goals, matching the right banking and wealth services to help you complete your mission. Thank you to the Business News for promoting our program in the biweekly business newspaper serving Northeast Wisconsin. The paper is delivered biweekly and contains relevant and useful information about the business community in Northeast Wisconsin. We would also like to recognize the David L. and Rita E. Nelson Fund within the Community Foundation for the Fox Valley region for their generous donation and support of Biz Talk and Score Northeast Wisconsin. And I would also like to thank all of the listeners for joining in each week, both here on WHBY and through our podcast, as that's published the Wednesday following the show going out on the air. So thank you, everybody, for that. So with that, we'll turn back to Kurt. And Kurt, first, could you let listeners know again how they can find Heling and Associates?
Yeah, they can go to our website, helingandassociates.com, Heling and associates.com. You can call our office, 920-886-2241. We're located in the Valley on American Drive, just off 41. We are taking new clients. We're interested in sitting down and talking with people. I'd be curious to talk to any small business owners out there. First meeting's free, so doesn't hurt to call and get an appointment.
Okay. So as we wrap up the show, let's talk a little bit about why someone needs to go to an accountant for taxes. So what are some of the things you have to say about that, Kurt?
I ran across an article. It was on a CNBC website, and it actually was a very good article. It was a surprisingly good article, quite honestly. The headline was the number one reason you need to pay somebody else to do your taxes. And it was written by a CPA, and the crux of it is that you should consider paying someone else to do your taxes when you receive money outside of your primary job. So, for instance, some examples they give are if you have a side business or are getting 1099 contracted income, if you have investment real estate where you're getting rent income from, say, owning a duplex or some investment property. They even mentioned selling a home or selling real estate. Anything that's outside of your normal W-2 job, there's going to be specific rules associated with it that the average person doing their own taxes is not going to be knowledgeable about. And when you're doing some of these, packaged softwares, if you don't start out down the right path, you can go down a wrong path and get things messed up and sometimes get yourself in a pickle, quite honestly. I've seen, for instance, a person who filed a tax return and had all their business income on there, didn't have any business expenses on there, wondered why they owed so much in taxes. And then trying to unwind that can be a mess in and of itself. So those are situations where you want to have somebody outside do your tax return for you, and not just do the tax return, but I would say also help give you some advice, some tax planning advice, some advice on what you can and can't deduct, because that's always a big issue, as well as some overall general business advice.
And for me, the other thing I'd add that stands out is we're in such a polarized environment now, and who knows who gets elected next time. There are so many potential changes to tax laws. You don't want to try and interpret them yourself when you've got people like Kurt who will go out and work with the right people to understand exactly what those changes mean.
Correct. Yep.
Okay. So once again, Kurt, we want to thank you for being a longtime sponsor on the show. We really do appreciate it. It means a lot to us here at SCORE. And for keeping our ex-host Pat Lowney gainfully employed and off the streets for 3 or 4 months a year. So the whole town appreciates that.
Pat needs a job.
Yeah. So thank you very much. And again, thank you to all our listeners. We're glad you joined in this week and hope you join in on a regular basis. If you want to listen to this show again or listen to any of our other shows, you can go to our website at biztalkwithscore.com. You can go to the Score Northeast Wisconsin homepage, and there'll be a landing page with BizTalk on it. And we have the last 7 years of episodes in both of those locations. You can find that. You can also go to your favorite podcatcher, such as iTunes or Amazon Music or iHeart, and you will find all the shows since January of 2024 out there, and we keep adding to them as we record. So once again, thank you to everybody for listening. We're glad you spent some of your weekend with us, and we'll be talking to you next week. Have a great week, everybody. Goodbye.